Welcome back to another breaking Bitcoin market update. I'm Justin Wise, lead analyst at crackingcryptocurrency.com, and today is Monday, February 28th, 2022. Now, over the weekend, the conflict in Ukraine escalated, with the most troubling news being that Russian President Vladimir Putin has ordered their deterrent forces, which include their nuclear strike forces, to ready themselves on high alert. Now, with this move, Putin means to deter NATO and EU forces from entering the fray or providing assistance to Ukraine. Now, Russia currently has a convoy that stretches over 17 miles, comprised of armored vehicles, tanks, and artillery, bearing down on the Ukrainian capital city of Kiev. However, Ukrainian forces have been extremely effective at making Russia pay for every inch of land they attempt to take. Meanwhile, the second largest Ukrainian city, Kharkiv, is seeing the heaviest shelling of the war thus far, with reports of significant civilian casualties. As peace talks concluded today with no positive outcome, it appears as if the war is far from over. Bitcoin, meanwhile, is on an absolute tear. We opened the day at 37,710, and as of the time of recording, we're trading at 46,681, a 15% movement to the upside within 24 hours. Altcoins followed right alongside, with the biggest gainers of the day including Luna up 24%, Waves up 30%, Cadena up 18%, Solana up 17%, and Cosmos up 12%. The rest of the major altcoins are also up double-digit percentage points as well, marking today the best returning day for cryptocurrency investing this year. And it has been a rough year, so a little green is quite good to see. So what are the implications for cryptocurrency in the near term? We'll break it all down for you. This is Breaking Bitcoin. All right, let's talk about Russia being cut off from the SWIFT payment system, which was just announced over the weekend. Now, first off, SWIFT can be viewed as the WhatsApp for global banking. It is a messaging system that allows banks to communicate privately and securely very quickly, which is important when you're moving around billions of dollars. Now, it's important to note that being cut off from SWIFT does not necessarily mean that Russia will be unable to conduct international banking. It will just be slower and harder for them to do so. However, the United States has barred any American-based companies or financial institutions from doing business with Russian businesses for the time being. Meanwhile, the European Union did announce over the weekend that they will be sending money and resources to Ukraine. Now, SWIFT connects more than 11,000 banking and financial institutions in over 200 countries and territories. Now, back when Russia annexed Crimea, there was talk of them being barred from SWIFT, but they never were. And as a response, Russia has, for the last 7 years, been working on building their own internal alternative to SWIFT. However, based on latest reports, it only connects around 400 or so banks or financial institutions, and it's never been stress tested like it potentially might be right now. So it's unclear how well they'll be able to do economically. Now, we often forget, but economic sanctions like the ones being imposed by Western powers will likely do nothing whatsoever to affect Putin directly. The burden of economic sanctions hits the people of a country, and as with all things, it hurts the poorest the most. The goal of economic sanctions, therefore, is to cause such stress among the citizens of a country that they rise up and overthrow their leader. And we will see what effect these current sanctions have as time moves forward. Now, what are the long-term potential impacts of these sanctions for cryptocurrency? First off, while non-United States countries seem to be on board with the sanctions levied against Russia, this is only the second time a country has been barred from SWIFT. The last country was Iran during its nuclear escalation and was used alongside other punitive sanctions that crippled the Middle Eastern country. However, the cloaked message that is being sent to other countries, even American allies, is clear. Use of the SWIFT system and participation in the dollar-denominated global currency is contingent upon not pissing off the United States. And as a result, I think we will likely begin seeing more countries looking for and developing SWIFT alternatives. This will certainly accelerate Russia's implementation and even China's movement toward a digital renminbi, while countries strive to de-risk themselves from a future potential conflict from the United States and the current economic hardships that may entail. Now, these current sanctions could become very bullish for crypto as citizens and governments look for alternatives to the USD fiat system. However, while foreign governments may now begin to accumulate Bitcoin as an obvious alternative, Western governments might simultaneously stigmatize cryptocurrencies and crypto market participants as being sympathetic to foreign aggression. Also, while we are seeing increased upwards pressure for Bitcoin now, increased demand, a surprising de-escalation of aggression may occur with the Russian-Ukraine situation, which would significantly alter the demand-side equation and put us back in the bear market. Now, while Bitcoiners have long talked about how global tensions will accelerate the adoption of cryptocurrency, we're seeing it happen live in front of our eyes, and it's pretty cool. However, we cannot discount the obvious, that the traditional markets have also been recovering, and current equity and cryptocurrency correlation is near its all-time high. However, new research from crypto fund Pantera Capital shows that correlations between crypto and traditional markets has historically loosened after 70 days, suggesting that the crypto markets could begin trading independently of US equities in the coming weeks. Now, with all that being said, let's head to the charts for today's technical analysis and trade recommendations. We're on the weekly chart of Bitcoin, and as we can see, Bitcoin has ranged between 36,000 and 43,000 for the past 8 weeks. So based on closing basis, this has been our range that we have been trading in. We have consolidated at the 100 weekly exponential moving average, and this has historically been a support zone for Bitcoin, and Bitcoin's price does react positively to this support zone. However, as I've noted many times, without fail, every time we come down to the 100 weekly EMA after reaching a market top, we inevitably end up descending much further to the 200 weekly simple moving average, which has signaled the bottom of Bitcoin bear markets since 2015. Without exception, every time a test of the 100, eventually a movement down to the 200 before the cycle is complete, the Bitcoin bottom is in, price consolidates, and begins the next cycle higher. For an idea of where the next cycle higher might lead, this is the Bitcoin Power Law corridor, which has accurately predicted the price of Bitcoin almost since its inception and after its first cycle. As we can see, we are 66% away in price from support, we are 27% away from the center, and we are 195% away from resistance, up around $126,000. Now, despite the joy and euphoria that a big green candle brings us, we've seen crazy geopolitical times before during Bitcoin's price history, and we need to be aware of the downside potential that this investment brings. Today, Bitcoin closed above the 26-period Donchian, which we utilize as our baseline, so we are trading above our average price for the last month. This is one of several bullish signals that I look for when taking a long trade. However, the current market regime is not trending. The current market regime has been ranging, which requires a different strategy. As you can see, we are forming a series of higher lows. However, we're also forming a series of lower highs. A pattern like this is known as a symmetrical triangle, and historically, they break out in the direction of the previous trend, which for us is bearish. It is a trend to the downside. Now, we have already taken previously our weekly long position based on Bitcoin's initial test of the 100 weekly exponential moving average and our expected bounce. We are currently in that trade and looking for higher price levels eventually if we do experience a more significant bounce. However, at this price level, I do believe we are at the max opportunity for a range high short. And utilizing Quadriga, which is our proprietary indicator for managing risk and taking profits, we can see where we are going to be managing risk on this trade at the $47,000 area for our stop loss. And we can see that all three of our take profits are contained within the boundaries of this symmetrical triangle, meaning that if Bitcoin does range high top here and retrace back down to put in yet another higher low, this is going to be a good position. And the risk to reward ratio for this trade is in our favor as the overall trend is to the downside. We have been experiencing this ranging behavior, and here we are again, Bitcoin experiencing resistance at the range high, marking our final take profit target at the current diagonal support level. Now, on the lower time frames, we also see bearish divergence in the form of time transformation, another one of our indicators, in Bitcoin's price on the 3-hour time frame. As we can see here, price is making a higher high. However, the oscillator is currently making a lower high, which is a bearish signal indicating a correction. Also, a lot of volume profile resistance here, high volume node. And as we can see here, the super duper DEMA strategy, which is one of our automated strategies, also did not take this long position. Now, our automated strategies, which are available to all of our premium subscribers, did very well today. We had 4 successful closed long trades on Byibt altcoins just today, February 28th. So we had a successfully closed long trade on Solana, on ICP, on Link, and on Matic. These are from the trend following super duper DEMA strategy. Yesterday, we also had 3 successfully closed short positions on Byibt altcoins, on SHIB, Hedera Hashgraph, Alice, and we had 1 losing trade in the form of Axie Infinity. Meanwhile, our bottom feeder strategy, which is our bottom detection algorithm, on Saturday had 3 successfully closed long trades, one for double digits and the other 2 in the high single digits. Now, currently, my daily time frame strategy is not signaling any long position here yet. We are negative here on Parallax, our confirmer indicator, even though our initiator time transformation in this case is crossing the 0 line and we are crossing the baseline. It is not enough, and we also see that we do not have expanding volatility coming in from Wada Atar explosion. We just simply have the green delta bar. However, my discretionary system is telling me to short at this price level with the pre-mentioned price targets, using a daily close above the current level of diagonal resistance as invalidation. Meanwhile, I'm going to continue to let my automated strategies eat up the market movements. And if Bitcoin does pull back here, it is likely that altcoins will pull back as well. We've had a very good, nice upwards thrust in our altcoins, and perhaps a healthy retracement here is likely before we get a retracement here on Bitcoin. Then we get another move to the upside where altcoins will lead that charge as well. But I do think we'll get a healthy retracement in altcoins moving forward. Now, this doesn't mean that you have to completely exit your altcoin positions. Let's say Luna, for example. We've been in this trade for a while, but certainly taking profits as we reach highs and expect a pullback for perhaps a re-entry into the trend or just a reevaluation of the position is intelligent here. The primary exchange that we trade on is Byibt. You can sign up using our link in the description to receive up to $200 in free cryptocurrency to trade with. If you do so, make sure you watch this video for some nuances on Byibt trading. Make sure to join our free public Discord with the link in the description. And if you'd like to improve your trading using our online trading academy to utilize our suite of indicators to help you navigate the market, get trade alerts whenever we buy or sell, and receive community and one-on-one mentoring, consider becoming a member of our trading group. All of that information and links are in the description below. Until tomorrow, I'm Justin Wise with Cracking Cryptocurrency, and this has been the Breaking Bitcoin Market Update. Trade safely, and I'll see you in the next one.